with chapter number 10 from your economics book of grade 10, and the name of the chapter is public finance. And today we're going to start from the meaning of public finance. Now in the book is given meaning and scope of public finance. The scope is excluded as per the bifurcated syllabus of semester 2. So we are going to understand what is the meaning of public finance. So public finance means the revenue, that means the earning and the expenditure of the government. Okay, so public finance means revenue and expenditure operates of the public authorities, which includes the central, that is the union government, and the state government, or you can say or any other public authorities at the local or regional level. So in a welfare society, the activity of the government involves the provision of defense services, transport and communication services, education, and you can say a lot more services which is to be given by the government to the common people. Hence the question arises, how should these activities be financed? Public finance is concerned with the revenue sources of the government and proper allocation of fund to the production of such services. Hence public finance is also concerned with proper policies with regard to the government revenue and expenditure. This is called fiscal policy. Okay, so the way the government is going to earn and the way the government is going to spend, this total policy when they're forming is called the fiscal policy. Next, we are, as per the bifurcated syllabus, we are having public revenue. What is the sources of public revenue? Until and unless the government will be earning, how the government will be spending, right? So the discussion of the public finance can be broadly divided into three parts. One is the public revenue, that is earning of the government, public expenditure of the, or you can say spending of the government, and public debt, that is the loans taken by the government. So what are the sources of public revenue? There are two broad sources, or you can say mainly we can categorize into two parts. One is the tax revenue, one is the non-tax revenue. Tax revenue means the revenue that the government earns by imposing different types of taxes, like you can say export and import taxes. Then we are having the sales taxes, we are having income taxes. So the taxes which are imposed by the government and the public is paying directly to the government, those are the, you can say, the tax revenue. Non-tax revenue are the earning of the government which is not taxed upon anybody. Okay, like the fees and the fines. If anybody is opening a shop, that person is a license, so he has to pay a license fee. That is a non-tax revenue. It is not forced, it is not imposed. Okay, as because you are going to do a business, you are paying certain amount of money to the government, so that is a non-tax revenue. If anybody is violating the traffic law or maybe without the helmet riding the bike, he or she is fined, so that is a non-tax revenue. So these are the profits, you can say, or the earnings of the government. Okay, and profit also will be calculated here as a non-tax revenue. For example, if the government is owning the railways or the airways or any kind of, you can say, the bridge, whenever we are crossing the bridge we are paying certain amount of toll tax. Okay, or in the high roads also sometimes we pay the road tax. Okay, and sometimes profit, the government owned industries are there and government is earning the profit from those industries. Like for example, we can take a railways. Okay, as the government is earning the profit, that is also a non-tax revenue. Okay, next we are having the direct tax and the indirect tax. So direct tax means there are two elements of taxation you have to understand. One is the impact, other is the incident. Impact means upon whom the tax is levied, or you can say upon whom the tax is applied. An incident is who is paying the tax, actually who is paying it, that is called the incident. So in direct tax we will find that the government is imposing the tax on a person and the same person is paying the tax. So in direct tax the impact and the incident is on the same person, that is called the direct tax. Whereas on the other hand we are having indirect tax. Indirect tax means government is imposing the tax on somebody, but the impact, payment is done by somebody else. That is called the indirect tax. So in other words we can say that in indirect tax the impact and the incident is on two different persons. Right? Let us take an example. So for direct tax, we can say income tax. Right? Government have already made a slab. If the earning is between 1 lakh to 5 lakh, you have to pay this much of tax. So that is already declared. If it is above 5 lakh to 10 lakh, this kind of slab is there for income tax. So as I'm earning, government is imposing tax on me and I am only paying. So the person who is doing the income, it is imposed on that person, and the same person is bearing the incident. So income tax, we can say, is a direct tax. Indirect tax we can take as an example of sales tax. Whenever the government is applying that upon this product this much of tax is there, okay, now the government is applying it on the product, we are going and buying it from the shop, the shopkeeper is supposed to give certain amount of tax. But as we get the bill, if you have followed the items we buy from the shops, from the shopping malls, the MRP is there including the GST. We are paying certain amount of money for the tax also. Right? So that is the indirect tax we are paying. The shopkeeper is collecting and he is now submitting it to the government. So it is imposed on somebody else, but the consumers is bearing the incident. Right? So for example, we can say that indirect tax, the impact and the incident is on two different persons. Like for example, sales tax. Next we are having the GST. What is the meaning of GST? Goods and service taxes. Now this is a value added taxes. Okay, the GST was introduced in India on 1st July 2017 and it replaced almost all the indirect taxes prevailed so far. So government is trying to make it brief. No need to have so many taxes. Right. So at a time they are just removing so many taxes and applying only GST. So GST is to be levied at all points where there is value addition. Like for example, we have to understand here, a farmer is cultivating and maybe he has cultivated some cotton. He is going to sell the cotton in the market. Okay, somebody who is having a industry, a manufacturing industry, a textile industry, he will be buying this cotton. As he is buying the cotton, right, he is paying the money to the farmer. Now, what will this manufacturer do with this cotton? He is going to make thread. As he is making thread out of it, he is going to sell it in the market. He is going to sell this thread. So he is adding value. He is changing this cotton into thread. He had added a value to it. He has changed the form of the raw material into thread. So now this thread is having some value. So he is now selling it including his profit and GST. As because he is doing the business, he have to give GST. Right? So as he is selling it, maybe who is making the garment will be buying this thread from him. Now as he will be buying the thread from the textile industry, what will this garment person do? He will also give certain amount of money and GST. And what will he do? Now not only he will be sitting with the thread anymore, he will now make it cloth. He will be now weaving the cloth. As he will be weaving the cloth, he is again changing this thread's form into cloth. As he is changing the form, again he will also try to earn some profit from it, and he will include some GST as because he is also doing the business and he also have to pay it to the government. Right now, the person, the tailor, is going to buy the cloth and make garments out of it. So the tailor is again paying the money for the cloth, including the GST. Now this person with the cloth will make a shirt or maybe a skirt, whatever he feels like. Now he will be selling it in the market. Again he added some value. It is no more a piece of cloth anymore. Now it have turned into a finished product. It have turned into a good. It have turned into a skirt. It have turned into a shirt which can be consumed, which can be used. Right now, people is going to buy this product as people is going to buy this product, as the consumers, the final consumers are buying this product, this finished product. Now we are paying the price for the shirt or price for the skirt, and we are including GST with it. So each time from the cotton to the thread, from thread as it got woven into the cloth, from a piece of cloth it is coming to a shirt, from shirt it is going to be sold out in the market. You can see how many stages it is crossing, and in the each stage we are finding that the value is getting added. With the each value addition we are finding certain amount of tax is getting levied. So this is called the GST. Now I have explained you with goods only. Services also include this kind of GST. Okay, next, what are the objectives? Why this kind of GST is there? To reduce the multiplicity of indirect taxes, as because there were too many indirect taxes, the existence of different types of indirect taxes at the central, or you can say the state level, makes the tax structure very complicated. So if all of these taxes are submerged into a single indirect tax, so the tax structure would become more simple and more you can say rationalized. To make the number 2 is to make the tax base wider and raise the tax revenue of the government. So if all the types of goods and services are covered under the tax, under one tax, then the tax based income, the government which is earning from this kind of taxes, will have a more wider sense of large segment of the population who consume all these goods and services would come under the indirect taxes. Right, they would help in raising the tax revenue of the government. To establish transparency in tax compliance. So several taxpayers in the earlier tax structure had to compile with different taxes or different tax rules for different indirect taxes in the central and the state government. There were several cases of miscalculation. Okay. Hence, the objective was to make the tax estimation payment procedures more simple and transparent so that people do not get confused and they are able to understand how much money they have to keep aside for paying the tax and what are the procedures of paying the tax. Number D is to establish a harmonized tax administration across the states. That is, since the different state governments follow different indirect taxes rate, the different tax structures, the objects was to eliminate such interstate differences in the indirect taxes or tax structure. Okay, the objective was to make the legal environment more business friendly so that the foreign investors would not find difference between any state. They can invest wherever they feel like. If it is, you can say, if the tax is equal in every state. Right, number E. To increase the efficiency of tax administration in the medium and long run through the automation of tax compliance procedures, the objects was to make the tax administration of the government more efficient, particularly during the medium and long run, to reduce the tax burden upon the consumers. The new tax regime was supposed to reduce the cascading effect of the indirect tax, that is a reduction and in the incidence of tax on tax, say a VAT on the price of the commodity, a commodity which includes union excise duty. Hence, with the introduction of the GST, the objective was to reduce the tax burden upon the limited consumers. Further, since the sellers would get the benefit of input tax credit, they can pass on the benefits to the buyers, thereby reducing tax burden borne to the consumers. Thank you.